Welcome to this condensed version of our live webinar on commercial mortgage brokering, presented by the Real Estate and Mortgage Institute of Canada. My name is Joe White, and I've developed and will be presenting this webinar. Quick overview of me: I've been in the industry since '88 and have been involved in teaching since '96. I was the part-time program coordinator in the Financial Services Underwriting Program, known as the FSU program, at Seneca College, a 14-course program required to become a broker in the previous licensing process. I also taught and developed several courses in that program. In 2008, I founded remic. In addition, I'm a principal broker of my own brokerage, founder of AmiPros, author of several books, including the textbook used by remic for the agent course for licensing, and I've taught a lot of students to become licensed mortgage agents and brokers. In other words, I love this industry and I am happy to be delivering this webinar today. Okay, enough about me, let's get started. This is what we'll be covering in this webinar. I'll start by letting you know how you can find out about upcoming courses that may be of interest and benefit to you. Then we'll discuss the size and scope of the commercial mortgage market, the income potential, the key differences between commercial and residential transactions, of which there are many, the steps in a commercial transaction, and while they're not the same for each one, there is an overall process. And then I'll wrap up with next steps, what you can do if you're interested in getting into this side of the mortgage industry. We invite you to visit us at remic.ca/success for a list of upcoming free webinars, in-person and online paid workshops, and other fantastic offerings designed to help you in your success. So let's get started. If a mortgage agent or broker wishes to get into the commercial market, there are typically two options: co-brokering and what we refer to as immersion. Co-brokering is where you maintain your focus on your core residential business, taking commercial transactions as they come and co-brokering them with an experienced commercial agent or broker. In this fashion, you will receive a split on the commission once the transaction closes. You may also be able to work with the commercial agent or broker to learn the business. However, you should also be prepared to be completely shut out of the process. Most commercial agents and brokers will want to take full ownership of the transaction so that they can properly manage the relationship. In so doing, the commercial agent or broker can act quickly and efficiently. An inexperienced agent or broker who wishes to be involved in the process may cause delays, provide faulty information to the borrower, and even cause the transaction to fail. No one wins in that scenario. The second option is to completely immerse yourself in the commercial market, either by joining a commercial brokerage or by taking the time to learn the market. Since the commercial mortgage market consists of a small number of lenders and brokers, you'll most likely find it very challenging to learn this business without joining a commercial brokerage, as most commercial agents and brokers will not freely share their knowledge with someone who wishes to become their competition. While this option is the quickest way to become a knowledgeable commercial agent or broker, it will undoubtedly take time away from your current residential business and potentially result in lowered income, at least over the short term. The fact is that commercial transactions bear little resemblance to residential transactions, and in many cases, learning the commercial business is much like starting over. Let's have a look at the size and scope of the Canadian commercial mortgage market. While precise numbers are difficult to come by, it has been estimated that the Canadian market has approximately $215 billion in outstanding commercial mortgages. Compare that to approximately $1.5 trillion in outstanding residential mortgages, and you can see that the residential mortgage market is about 7 times larger than its commercial counterpart. That doesn't mean that the commercial mortgage market is not worth your time. On the contrary, it's an incredibly worthwhile market with commissions that are substantially larger than the residential market. Well, the commissions are larger when a deal closes, and when the transaction is done properly, things we'll be talking about shortly. But first, let's have a look at some of the examples of commercial properties that you come across every day in your travels, but may have never considered trying to finance. Here's a picture of an industrial property. You've likely seen them before, and they're just one example of the type of building that requires financing to purchase or refinance. Unfortunately, we still use them, at least most of us, Gas stations can be difficult to finance for independent operators. An example of a smaller commercial project, gas stations present a specific problem: underground gas storage containers that may leak. In other words, gas stations can present an environmental problem. Many institutional lenders will shy away from gas stations for that reason, leaving independent operators with a difficult time getting financing, while franchise operators may get financing from their parent company. Another example is a medical center or other types of buildings purposed as medical or clinical. A favorite of many, apartment buildings are great to finance as there are typically more options, including default insured through CMHC, for example. And here's a great combo of buildings to finance. We've got office buildings, a place of worship, and the CN Tower, which doesn't need financing, unfortunately. While most developers have regular sources of financing, lots of projects don't, as was seen in the syndicated mortgage market. Finding an opportunity can take resourcefulness, planning, and a lot of networking, but commercial projects need financing are everywhere, including right where we live. Income potential. Unlike the residential mortgage market, where virtually all lenders pay a commission or referral fee, it's safe to say that in the commercial market, most lenders do not. This requires the broker to charge a fee in those cases. While there are no typical fees that a broker will charge for a commercial transaction, they do tend to range from 1 to 5% of the mortgage amount. This is dependent on several factors, one of the greatest being the mortgage amount. For example, on a $200,000 mortgage being placed on a commercial condominium, the broker may charge 4% as a brokerage fee. That would result in a fee of $8,000. On a $2 million transaction, the broker may charge a fee of 1% or less, depending on the circumstances, resulting in a commission of $20,000. So, while the size of the $2 million transaction is 10 times the size of the $200,000 transaction, the fee is not 10 times larger. In a commercial mortgage transaction, there is significant negotiating, and if not done properly, the client can be lost to a competitor. Key differences. As we saw earlier, in a commercial transaction, ICI or industrial commercial investment type properties are being dealt with. These can include apartment buildings, office buildings, strip plazas, shopping malls, warehouses, factories, recreational properties such as golf courses, and so on. To be able to provide sound advice to the potential borrower, the mortgage agent must have intimate knowledge of the workings of the property that is the subject of the financing. Without such knowledge, the broker or agent will likely put both the lender and borrower in jeopardy of wasting time and money. Appraisal. To appraise a residential property in Ontario will normally cost in the range of a few $100s, depending on where the property is located. For example, in the GTA, an appraisal may cost slightly less than $300 or $400. In a commercial transaction, appraisal may cost from a low of $2,000 to a high of $50,000, depending on the property and the scope of the appraisal, and may take up to 3 months to complete. It's important to know what appraisal requirements are involved based on the potential lender before requiring a client to pay such a significant amount for an appraisal. Environmental. In many cases, at least a Phase 1 environmental site assessment will be required by the lender, costing between $3,000 to $5,000. This is a written report that looks at the likelihood of contamination by referencing historical sources, prior uses of the property, and so on. This is to determine whether there are any contaminants in the property. If it is suspected that there are, a Phase 2 will be required. This entails taking and testing soil samples and can cost anywhere from several thousand to several $100,000, depending on the size of the property and the scope of the samples. If contaminants are found, a Phase 3 will be required, which is a remediation process, which can take several months to complete and tens to hundreds of thousands of dollars in costs. Income. To determine the income that will be used to service the debt, the broker must look at the type of property. If it's an income-producing property, such as an apartment building, then the net operating income will be used. The broker must know how to standardize it, what should be included and excluded, as well as what the typical capitalization ratio is for the type of building and its area. If it's not income producing, then typically the broker will have to obtain financial statements from the corporation applying for the mortgage and be knowledgeable enough to decipher and interpret them accurately. Lenders. The commercial lending market in Ontario and Canada as a whole is quite small, limiting the number of options available to a broker. This has also resulted in commercial lenders being very selective about with whom they deal. Most commercial lenders do not like dealing with inexperienced brokers. They also have certain requirements regarding application submissions to which they must adhere. Timing. While a typical residential transaction can be completed within 2 weeks, some can be funded quicker, while others, such as purchases, may close in a few months after the initial application. Commercial transactions can take anywhere from 3 months to a year, a little bit less or a little bit longer, depending on the type of the transaction and its complexity. Now let's have a look at the steps in a commercial transaction. First, it begins with receiving a request, and that can be from a referral source, from advertising that you've done, and so on, but it is an expression of interest in obtaining financing. The next step will be to ask for details on the transaction, such as the purpose of financing, the property description, type, usage, zoning, environmental issues, phase 1, 2, and 3 reports, tenancies, and so on. Some types of zoning that we'd be looking at are industrial, or M, commercial, C, residential, commercial, mixed, institutional, and so on. We also require the borrower's details, whether it's a corporation, partnership, sole proprietorship, or personal. Any guarantor's details. We need to obtain applications with personal information, net worth, and income. Step 3 is we receive and review information and qualify the transaction. So we're looking at the borrower's corporate financial statements, the borrower and the guarantor's personal and financial information, rent rolls if necessary, operating statements, any old appraisals, an old phase 1 environmental site assessment report, the offer to purchase, an existing mortgage statement, and so on. Then there's the negotiation of fees, and that is particularly important because at this stage you can have the potential borrower leave due to requesting too high of a fee, or you may not understand the scope of the project and request too small of a fee. This is where experience is vital in understanding how to negotiate the fee. We also have to get signed an agreement outlining the terms and conditions to obtain that fee. We then submit the application. If this is a private lender, then we would provide the private lender with the investor lender disclosure and all other documentation that a prudent investor or lender would need to make a decision to lend. Now, in regards to commercial mortgage transactions, submitting the application is in many cases more along the lines of pure brokering. In residential transactions, we tend to see a cookie cutter type of application. Although the property might be slightly different, the application, the process of submission, the requests from lenders tend to be very similar. In a commercial transaction, that's not the case. In a commercial transaction, there are many factors that come into play, and you, in many cases, depending on the size and scope of the transaction, will prepare a report and a presentation for the lender. You will then sit down with the lender, oftentimes in person, and present this application for financing, which includes much more information than we find in a residential report. This could include information on the documents that I've just mentioned, as well as the feasibility of a project and so on, and a history of the developer, if that's the case, or the borrower, and so on. So in other words, you really are brokering this transaction. You're presenting it to a lender in the hopes that the lender will find that there's enough there to merit going to the next step. And the next step would be, from a lender's perspective, that they would provide us with a letter of interest or a letter of intent. And in regards to that, that means that they are interested in taking the next step and looking at the transaction more closely. That doesn't mean that they are committing to fund it. At that stage, we would go back to our borrower get that letter of intent signed, and then provide that along with the appraisal and other documents to the lender for their further investigation. It's also important to note that at this point the lender may ask for an application fee or some other type of fee, perhaps legal fees payable directly to a lawyer, and so on. This is very unique to the transaction, so it depends on the type, the size, and the scope of the transaction. After it's been reviewed, and this can take some time depending on, again, the size and the scope of the transaction, it may take several weeks or longer for the lender to actually get back to us with a signed commitment. Then we're going to prepare and obtain signatures on disclosure documents. Then we're going to present the commitment to the borrower, keeping in mind, of course, that we're following legislative requirements in regards to timing. Once the borrower is happy with the commitment, they will sign it, give it back to us. We will then go through the process of obtaining outstanding conditions. As we do that, the information, outstanding conditions, will be forwarded to the lender. We will also need to send our brokerage agreement to the lawyer. This is a letter of direction that allows the lawyer to redirect funds from the advance to us for our brokerage fee. As we go along towards closing, it's important to stay in touch with the client as well as the lender to ensure that everything works smoothly. Then, at the very end, and this is where it's exactly the same as the residential transaction, you'll receive your commission. This commission or brokerage fee will be sent directly from the lawyer to your brokerage, and then the brokerage will pay you based on your contracted rate. That's a general overview of a commercial transaction. Your next steps: please check out remic.ca/events for upcoming webinars and courses. Attend our upcoming Introduction to Commercial Mortgage Brokering. Details are on our website. And check our site out at remic.ca/success for pricing, dates, times, and locations. I'd like to thank you for taking the time out of your schedule to attend the presentation. If you have any feedback at all or any questions, please feel free to contact me.